Advanced Financial Accounting OneNote Practice Problem. In this presentation, we're going to work a practice problem in OneNote related to forward contract for speculative purposes only. Get ready to account with Advanced Financial Accounting. Here we are in OneNote, and if you have access to OneNote, you're not required to have access to it, but if you do and you would like to follow along, we are on the 1138P4 tab in the problem presentations section. So we're going to go through the information first. We'll go through all of the information for the practice problem. Then we'll go back through it, pulling relevant points in it as we work through the practice problem. First component to this practice problem will look similar to prior practice problems if you've been following along, because we will have similar components to it, focusing in on those areas that will differ. So we have 12-1x1. U.S. companies entered into a 120-day forward contract to purchase Australian dollars, 100,000 Australian dollars represented by the AUD Australian dollars. So then we have the spot rate and the forward rates for the applicable dates. We will be back to this when necessary. And this time we're just going to be focusing in on the forward contract itself. So the forward contract was for speculative purposes only. So we solely put the forward contract in place for speculative purposes, and therefore we will just be considering and looking into the forward contract, the effect on it, that effect then being, or possibly being, gains and losses as a result of the contract. So first we're just going to simply put the forward contract on the books. So we will put the forward contract on the books. I'm going to pull up the trusty calculator, which is floating up in a different screen. So we're going to pull that thing down, and we're going to have the Australian dollars, which is 100,000. We're going to multiply that times the current time period, which is going to be 12-1x1. That's when we started the forward contract, and it's going to be lasting for 120 days. So we're going to be putting it on the books using the forward rate, because the forward rate is predicting up into the future at the end of the contract what it will be worth at the end of that time period. So we're at, in other words, 12-1x1. We're looking forward with this rate to that endpoint being 331x2. So we'll take the 100,000 and we're going to multiply that times the 0.609. That's going to give us the 60,900. We're basically going to put an asset and a liability on the books with regards to the forward contract, that asset being the foreign currency receivable from exchange brokers in Australian dollars, and then the liability being dollars payable to the exchange broker in US dollars. So that's going to be a debit to the receivable, a credit to the payable. Here it is being recorded. Note that the foreign currency receivable from the exchange broker is in Australian dollars, meaning we expect to be paid in Australian dollars in the future, which would be the equivalent now of 100,000 Australian dollars, which we are now valuing at the current rate as best we can using the forward rate, or projecting the rate what we think that it will be at using the forward rate to be 60,900 US dollars. The dollars payable to the exchange broker, on the other hand, are simply dollars payable to the exchange broker. These are dollars that we're going to be paying at the end of the contract. Nothing funny going on here. That number is just going to be sitting there till the end of the contract when we actually pay it off in dollars. The thing that's going to be fluctuating then as we go through the changes over time, the differences in the currency, will be the foreign currency receivable from the exchange broker, because it will then be in the Australian dollars. There's where the speculation will take place. So the next relevant date that we're going to have is going to be 12/31x1. That is the end of the year. So it's the end of the year. We have a balance sheet date. We're going to revalue then the currency that we have here, just like we would with any other kind of thing, such as stocks or bonds or something like that, because there's a market for it. There's a market for it. Therefore, we can use that market to know what the current value of it is, and that's what we will do using the current rates. So we're going to say, all right, well then let's go back up to the prior time period and say this is what it was on the books before. This is after the next journal entry is going to happen. So how do we get to that journal entry? We would say, all right, we're going to take the 100,000 that we're going to receive in Australian dollars, and we're going to speculate that we're going to receive it on 331x2, and the current date is 12/31x1, so the forward rate as of that point in time is going to be 0.612. That's going to give us the 61,200. We currently have on the books 60,900, so if I take the 61,200 minus the 60,900, I get a difference of $300. That's going to be our journal entry, which we can also calculate by saying the difference between the rates, 0.612 minus 0.609, that's going to be that times the 100,000. I put 10,000. 0.612 minus 0.605, no, one more time. 0.609 minus 0.612 times 100,000. Okay, there's the 300 here. Now that 300 is going to result in a gain. Why is it a gain? This is where the speculation comes into play here. Because we had $1 Australian worth 0.609 US dollars before. Now $1 Australian is worth 0.612 US dollars. $1 Australian worth more US dollars. Therefore, the Australian dollars has gotten stronger compared to US dollars, or you could think of the US dollar being weaker compared to the Australian dollar, and we're going to get paid in Australian dollars. And the fact that the Australian dollar is stronger now, we're going to get paid by something that has more purchasing power, therefore we have a gain. So we're going to say, all right, we got a gain down here. That's going to be a debit to the foreign currency receivable by the $300, which will bring that receivable up to the $61,200. That being the current, basically, price or our current speculation price. That once again being the 100,000 times the 0.612, the 61,200. Other side going to the foreign currency transaction gain. We have the gain down below, increasing the net income. The next relevant date that's going to be taking place is 3/31/X2. That's going to be the end of the contract. So the end of the contract is taking place. So what we want to do now then is revalue as of that point in time. So we have to revalue the receivable first as of the end of the contract point in time. So let's go back up to the prior point once again. I'm going to go to the prior point. This is where we were at before, the 61,200. Now we're going to say it's 3/31/X2. What should this number be after our next journal entry? Okay, we're going to take out the trusty calculator. We're going to take the 100,000 times. Now we're at the 3/31/X2 point. So that's going to be this item. We're at the spot rate right now. Why do we have a spot rate, not the forward rate, when we've been using the forward rate the whole time? Because we're now at 3/31/X2, which is the end of the contract, 3/31/X2. So we're not projecting forward to 3/31/X2 anymore because it's at 3/31/X2. Therefore, there's no speculation taking place as to what the value will be as of that date because we're on that date. So now we're going to say 100,000 times the 0.602. That's going to be the 60,200. If I take that minus what's currently in there, minus the 61,200, we're going to get the $1,000 difference. That $1,000 difference is going to result in a loss. Why is it going to be a loss? Because we were using this rate before. $1 Australian is worth 0.162 US dollars. Now $1 Australian is worth 0.602 US dollars. $1 Australian is worth less US dollars. The Australian dollars got weaker, or the US dollars got stronger compared to the Australian dollar. So the Australian dollar's weaker is what we would typically say. And we're getting paid in Australian dollars. We're getting paid in something that has less purchasing power than it did before. That's not good, right? So we're getting paid something that's less valuable. So that's going to be a loss. So now we're going to debit the foreign currency transaction loss, the 100,000. We're going to credit the foreign currency receivable from the exchange broker for the 100,000. So we've got the loss now on the books. Also note that we are currently in year 2 now. So in year 1, you'll see that we took our ending balances here. Those are going to be our beginning balances for year 2 at this point in time. The equity section now being closed out. So we have the 100,000, the 300 represented in the retained earnings 100,300 here. So this is like the post-closing trial balance after year 1 or the beginning balance for year 2. Now we're going to record the current loss being the 100,000 recorded on the income statement. Other side going to the foreign currency receivable. Foreign currency receivable now at the 60,200. That 60,200 once again, one more time, calculated as the 100,000 times the 0.602, 60,200. Okay, so now next thing that's going to happen is we're going to say that we're going to pay off the payable, right? We have this payable on the books that's at the 60,900. That 60,900 has not changed since we first put it on the books, because it's on the books in dollars. So this was the part of the item that was stagnant, did not change until the end of the point, and it was put on the books at that original 100,000 times the spot rate at the point in time that we started this whole forward contract, which was 0.609, and there's the 60,900 that we started with. So we're going to take that off the books, and we're just going to pay it off with cash. So that we said we would pay that. That's part of the contract. Now we're simply going to pay it. Nothing tricky going on here. Debiting the dollars payable in dollars, it going down to zero. We're crediting the cash in dollars, and the cash is going down. Next, we're going to say that the other side of the foreign contract is going to take place, which is that the receivable, we're going to collect on the receivable side of things. So let's go back up prior to the collection first. We had the 60,200 in this receivable. We're going to collect on it now. Now you might think that we should debit cash and then credit the receivable, but we're not going to debit cash because cash represents currency, US currency, dollars, but we're going to get Australian dollars. So we're basically have another kind of asset. It's cash, it's currency, it's liquid in that sense, but it's not our measuring tool. It's not US dollars. It's not what we use to measure things. So we're getting things. You're just thinking of them as items, things that we're valuing using a market, using our measuring tool, which is US dollars. So we're going to be putting those on the books then. We're going to be debiting then the foreign currency in units, which is 100,000 Australian dollars, which we're putting on the books, valuing them in US dollars, which is that 60,200, which we've calculated a few different times as the 100,000 times the 0.602. There's the 60,200. We're reducing then the receivable then going down to zero. So receivable then going down to zero, as we can see over here. We now have on the books the 60,200 foreign currency units, those being Australian units, the 60,200 representing the dollar equivalent of what we actually have, which is 100,000 Australian dollars. So now we have then, at the end of the day, cash is this. We have the 60,200 units, $60,200 worth of the 100,000 Australian dollars. The foreign currency receivable is now back down to zero. The dollar payable to the exchange broker has now been paid off. The earnings for the prior year are included in the retained earnings here, and the current earnings are a loss. So we had a loss from this. So was this a good deal? Well, we had it increased 300 last time, and we lost money this time. So it was looks like a bad speculation to me. We lost on that particular speculation.